Have you ever noticed something strange about people who are truly wealthy? They don't look like it. They don't live the way movies or social media tell us rich people should. They're not constantly upgrading, chasing visible luxury, or feeling the need to broadcast their success. Meanwhile, many people who look incredibly wealthy are quietly drowning in debt. This isn't an accident. It's a fundamental misunderstanding of how wealth is actually built. Let's start with a simple comparison. Imagine one person earns a high income and spends most of it upgrading their lifestyle. A bigger house, a better car, premium everything. From the outside, their life looks impressive, right? Now, picture someone else who earns a similar income but keeps their lifestyle almost exactly the same. Same house, same car, same habits, quiet, unremarkable. If we fast forward 30 or 40 years, one of these people is financially free and the other is trapped. The difference isn't their income. It's their consumption. We've been trained to believe that wealth equals maximum spending. That the reward for success is to turn every dial up: housing, transportation, clothing, vacations, status symbols. But real wealth operates on a completely different logic. To understand why billionaires often don't look rich, you need to understand how they see money. Most people see money as something to spend. Wealthy people see it as something to deploy. Think of it this way: every dollar is potential energy. Spend it, and that energy is released and gone forever. Invest it, and that energy multiplies. This is the crucial part that most people miss. When you buy something expensive, you don't just lose the price you paid. You lose everything that money could have become in the future. That's the real cost of consumption. A luxury car isn't just a car. It's decades of future compounding that you just traded away. A bigger house isn't just more space. It's higher taxes, higher maintenance, higher insurance, and less financial flexibility for decades to come. Every lifestyle upgrade locks in a higher cost of living that your future self has to support. This is why luxury is not neutral. Luxury creates friction. It adds complexity. It demands your attention and consumes your mental bandwidth. The wealthiest people understand that your attention is far more scarce and valuable than your money. Every single object you own requires decisions: maintenance, management, insurance, repairs, coordination. A large, extravagant lifestyle essentially turns your life into a small corporation. You're no longer managing your capital. You're just managing your stuff. This is why efficiency beats extravagance every time. A simple life preserves your focus. A complex life just leaks energy. It's also why you see extremely wealthy people wearing plain clothes, driving unremarkable cars, and living in homes that are modest relative to their net worth. It's not because they can't afford more. It's because they deeply understand opportunity cost. When someone obsessed with status looks at a $50,000 purchase, they see immediate enjoyment. But when someone obsessed with compounding looks at that same purchase, they see what that $50,000 could become over time. With long-term market returns, that money, invested for 30 or 40 years, could grow into hundreds of thousands, sometimes even millions of dollars. The upgrade didn't just cost $50,000. It cost a future that no longer exists. Now multiply that single decision across decades. A slightly nicer apartment here, a slightly better car there. More expensive habits, premium subscriptions. It's all just lifestyle inflation disguised as a reward. Individually, these decisions feel harmless, almost deserved. But collectively, they are devastating to your financial future. This is precisely why a high income does not guarantee wealth. Someone earning $250,000 a year who spends $230,000 is fragile. They are one emergency away from disaster. But someone earning $120,000 a year who only spends $60,000 is powerful. The gap between what you earn and what you spend is where wealth is built. That gap buys you time. It buys you options. It buys you freedom. And this is where the illusion of looking rich becomes so dangerous. Social media has turned lifestyle comparison into a global competition. You're no longer just comparing yourself to your neighbors. You're comparing yourself to carefully curated highlight reels that are often funded by debt. Most of the visible wealth you see today is financed. Expensive houses are stretched to the financial limit. Cars are leased, not owned. Luxury watches are financed. Vacations are paid off months or years later. It looks impressive from the outside, but it feels exhausting from the inside. The truly wealthy simply opt out of this game entirely. They understand that the pursuit of status is a bottomless pit. There will always be someone richer, louder, and flashier. Trying to keep up guarantees only one outcome: permanent pressure. So they don't play. They choose quiet consistency over visible success. They protect the gap between what they earn and what they spend like it as sacred because it is. That gap is what allows them to take calculated risks, survive economic downturns, and act decisively when great opportunities appear. The person with high expenses has no margin for error. The person with low expenses has leverage. This is why real wealth is quiet. Loud wealth is usually a sign of insecurity. Quiet wealth is confidence. People who feel the need to constantly display their success often haven't truly internalized it. People who don't display it don't need external approval. Looking ordinary becomes a strategic form of camouflage. It reduces unwanted attention. It lowers people's expectations, and it reduces your vulnerability. There's another important psychological piece to this puzzle: adaptation. Upgrades feel incredible, but only for a brief moment. You buy something new, you enjoy it, you feel successful. And then it just becomes your new normal. Your happiness level resets. But the cost doesn't. The payments stay. The maintenance stays. The financial pressure stays. You end up paying a permanent price for a temporary emotional boost. Wealthy people intuitively understand this. They find their own enough level of living, a level that is comfortable, safe, and functional, and they simply stop there. They refuse to pay the adaptation tax. This framing is critical. Billionaires don't live modestly because they're wealthy. They became wealthy because they lived modestly. The restraint came first. The compounding followed. Ultimately, what matters most is not what you make, it's what you keep. Your savings rate is a better predictor of your future wealth than your income ever will be. Imagine two people who earn the same salary for their entire career. One upgrades their lifestyle constantly. The other holds the line and invests the difference. Decades later, the outcome isn't even close. One retires anxious, still worried about money. The other retires free. Same income, different decisions. So the real question isn't, can I afford this upgrade? The real question is, what future am I trading away to buy this? Wealth isn't about deprivation, it's about priority. It's about choosing ownership over appearance, freedom over signaling, and having options over getting validation. In a world that's obsessed with looking rich, the most powerful move you can make is to refuse to perform. Build your wealth instead of consuming it. Invest the difference. Let everyone else play the status game. Thanks for watching.